This week marks a busy one for the US economy. Yesterday saw Janet Yellen being confirmed as the first female chair of the Federal Reserve, admittedly by the least Senate support on record. And of course, we have the all-important NFP figures due on Friday, amongst other data releases. Down the line to help decipher how the markets may react is David Keeble. David, it's a bit of new meets old with Yellen's Fed chair confirmation coming ahead of last month's meeting minutes being released tomorrow. Now, December's taper decision took many market participants by surprise. Do you think we will receive a clearer indication from the minutes in terms of consistency of tapering? If so, what do you think investors are holding out for? How much has already been priced in?
Yeah, I mean, on the taper, Bernanke's already spoken, of course, at the press conference, and the party, so the official line, is everything is going to be data-dependent, extremely data-dependent, but the bar to actually increasing the QE amounts is quite high. So what I think we'll hear from the minutes is that the taper continues at the current pace, unless something goes drastically wrong with the economy. However, I think if you look at what the market's expecting here, they're expecting a cut of around 10 billion per meeting, I think till around about October when QE will have finished. Investors know, however, that the Fed voters really do change a little bit as we move into 2014, and in fact they do turn just a little bit more hawkish. So I think, even though Yellen is taking over from Bernanke and probably a little bit more dovish, I think we'll probably want to see the end January FOMC meeting really to fine-tune those expectations on how fast this taper takes place.
In terms of pouring money into the economy, the US are in unprecedented territory. Bernanke managed to get the Fed on board and wasn't hugely tested in his dovishness. Do you think Yellen will be granted the same allowances, or will the market expect more now that there are some signs the economic recovery seems to be gaining momentum?
Yeah, I mean, as I said, Yellen is a bit of an ideologue in the sense that she really takes the high unemployment level as almost a personal affront. I feel certain that she really wants loose monetary policy, and she's wanted that for a while. But I don't believe that she's really tied or a great fan of QE. If you look at the last, in the 6 months before her Senate testimony, the subject of asset purchases was hardly mentioned by her. So what I think she's going to try and do as she moves into 2014 and takes over the helm is that she's going to not fight. If there are some hawks that want to sort of knock down QE a little bit, I don't think she'll be too bothered. I don't think she's tied to the QE program. But what she will want in response, I think, or she will fight tooth and nail for, is decent forward guidance. And so, I think maybe as the year progresses, and this isn't something for the first half, but, there'll be a discussion about when to actually hike rates. And I think that's where she'll actually battle more significantly.
On that note, the US trade deficit was the smallest in 4 years in November, as exports hit a record high and weak oil prices restrained import growth. Inflation hasn't seemed high up on Yellen's priorities so far. Could this give her course of action more impetus?
Yeah, I mean, the trade data are exceptionally good, and I've seen some estimates that GDP is pushing 3% now in the fourth quarter. But as you rightly say, there hasn't been much of a discussion yet on the inflation side because the output gap has simply been too large. What we're expecting to see is that, firstly, we should see wages going up, I think, more than inflation. And we haven't really seen that in any significant sense yet. So, when we get the employment numbers coming out on Friday, that's one component where I think some of the Fed members, particularly Yellen, will start to put a little bit more emphasis. And then we can start talking about inflation once we've seen the wages going a little bit north.
Once the FOMC hoopla is out of the way, the first NFP of 2014 will be upon us, with the ADP going some way towards an indication of the jobs figures. Now, obviously, the seasonal volatility plays its part in the December report. So what sort of number are you expecting, and how do you foresee the dollar performing as a result?
Yeah, to be blunt, we're expecting 200,000, really, because initial claims, employment components of ISM, etc., are all roughly in line with where they've been in the past few months, if not just a little bit better. But as you're aware, payrolls is always a bit of a turkey shoot. I hate the seasonal analogy, but the December seasonal adjustments aren't small, although they are sort of somewhat bigger in November as you take on workers and then you lay them off in January. So that's always a little bit of a problem. I think more problematical at the moment is the actual unemployment rate. The household survey is honestly a bit of a mess. For example, last month we saw 818,000 jobs created according to that survey. And even though there were some distortions there as we came back after the government shutdown, even the size of the labour force that we lost as a result of the government shutdown, we haven't fully taken back yet. So, it takes a more intelligent guy than me to understand what's going on with the unemployment rate. But I think actually that could as much frame what's happening with the dollar rather than just the pure payroll number, which seems to have settled down into a nice tight range. We're looking for about a 7.1% unemployment rate, a slight uptick. And, of course, level of unemployment directly linking into the level of the size of the QE program really suggests that we've got to pay real big attention to this. If you do get a very strong number from payrolls and unemployment, it can almost have double the usual impact.
David, thank you so much for your time and perspectives today. It's been great chatting all this through with you. So viewers, that's all from me and David for the moment, but the TV team will be bringing you the latest news from the US and beyond throughout the course of the week, so please do keep clicking back. Goodbye for now.